For someone who never planned their finances before, what would the first step, what's the first step they should take?
So when I have a client, I sit down for the first time, I listen to their story and their goals and what they want to accomplish, and then I start creating a financial plan. The first thing we want to do is emergency fund. Emergency fund is a part of the risk management, basically. Emergency fund, we want to make sure you got some money set aside for the unexpected. It's going to be some rainy day. I'm sorry, go ahead.
Do you have like a number for it?
Minimum three, ideally 6 months of your monthly expenses. So if your monthly expenses is about $5,000, including rent or mortgage or car insurance, grocery, if you have kids or stuff like that, so that's $5,000. Minimum you need to have 15,000 set aside on an account which is very liquid. Ideally, high yield savings account because you don't want to leave it on a regular savings account because you're not making no money. 6 months, that's about $30,000. So it just depends on your
Expenses.
your expenses. Yeah, you want to have that planning, also insurance, protecting, having an emergency fund, then protecting your family in the event something happened, right? One thing is
Yeah.
guaranteed is death, but we don't know when it's going to happen. So if that happens, so you don't want to be a burden for your family. Some people, they have mortgages, especially Africans, for instance. I know there's talk about life insurance is something taboo in the African community, especially Congolese community, because I'm Congolese. And then what happened when someone passed in the community, what they do, they call every member of the community, asking people to come together for money. But they don't know people, they got their own issue as well too. So versus you can have a cheap life insurance and something happen to you, your family don't have to beg other people to get money, and they can pay off the debt, the mortgage, and all the stuff like that. So I would say emergency fund insurance, disability insurance is super critical because if you get sick or injured, you're not able to pay your rent or your bills or anything. So you want to make sure you protect your ability to make money, your incomes. That's what disability does. And then start investing. Of course, if you're starting and you don't have a lot of money, you're not going to do some speculative investment, right? You're not going to go with crypto. I see a lot of people going with crypto when they're just starting. It's you want to avoid high risk investment. So
Yeah.
you want something small, like such as you can use a investment retirement investing. I'm sorry, employer sponsored accounts such as the 401k, 403b, TSP. 403b that's for school or nonprofit. TSP for the army. 401k that's everybody know that.
Yeah.
Yeah, small stuff like that, and even sometimes the Roth IRA for individuals, just to put a little bit of money every single month to be disciplined.
What's the percentage for the APR for the Roth IRA?
That's the market.
Oh, just based on the market?
Yeah, it depends if you go with it depends where high is it invested.
Okay.
There's a lot of mistakes. One of the mistakes people do is they think they put the money, they do themselves, for instance. They put the
Yeah.
money in a Roth IRA, nothing happened because yeah, it's just like you put money in the checking account. You got to reinvest the money inside. And then you need to allocate the money. You need some money allocation, diversify the money.
I should say, like, many people don't think about disability income, right? So why is this such a crucial part of financial security?
Just think about it. Today, you go to work, you are able to pay your expenses at home, your mortgage, your car, just to have fun on the weekends. And you might have goals and projects you're doing, ambitions, dreams you're doing because you're working. If tomorrow, for whatever happened, you become disabled, I mean, when I'm saying disabled, I'm not even talking about, something crazy. I'm talking about you become sick or injured, anything that's going to prevent you from going to work, and you cannot go to work for a year. Think about it. Worst case scenario, 5 years old. I don't know how many years. How are you gonna do now to keep up with your rent, your bills, your expenses, and your goals? You cannot do it. The disability replace your income. I mean, not replace. I'm sorry, protect your income. So if you have disability with once again a good insurance company, you file a claim and they're gonna cover your expenses. If you have 100%, they cover 100% of your expenses or your 100% of your income. I'm sorry, until you get back to work. Whether that's 1 year, 2 years, 3, 5 years. It depends on your benefit. So you're not impacted. The common thing we see with people is they are sick or injured or actually disabled, but they compromise their health just to go back to work because they have no other choice. Either don't go to work, they get evicted, they're gonna be behind in their bills. So they just compromise their health to go back to work. If you have a disability insurance, you don't have to compromise your health. You can take time and recover because you get your money monthly.
Okay. And I believe some companies provide that, right? Or is it
Yeah,
something that you have to use a third party? for.
No, some company do provide, but they don't provide. Most of the time, they don't provide 100%. So
Hmm.
uh, generally, what we see is about 60%. And keep in mind, 60% of your income is also 60% before taxes. So after tax, half of your money you gain. So if today you're making, let's just say $10,000 a month, and your expenses are about $7,000 a month, and you become disabled, you're only gonna make $5,000 from your company. So what you want to do, you want to get an external insurance company they can cover the rest of the extra 50%. So you got 100% your salary when you're away from work.
And then what is it based on to be eligible for those insurances? Does it like, you have to be healthy, or do you have to be in type of way physically for you to be eligible for those?
Yeah, insurance, all the insurance product, not all the insurance, I'm talking about life and disability insurance product is based on two things, primarily on two things, your
Mm-hmm.
age and your health. If you're
Mm-hmm.
unhealthy for whatever reason, you probably gonna get declined, especially if you go to like those large companies such as Northwestern Mutual, Mutual Life, Mass Mutual, New York Life. Chances are you'll be declined if you're super unhealthy.
Mm-hmm.
But if you healthy, they can approve you. Or if you're not specifically super healthy, but you have a little bit of health issue, they can approve you, but your like it's gonna be just a little bit more expensive because you are more at risk. And as far as how much they're gonna pay you, it just depends on your salary, how much you're making.
Okay.
If you are an employee, the requirement is most of the time your pay stub, if you're W-2 pay stub. And if you are self-employed, they ask at least 2 years of your tax return to cover you.
Okay. So it's pretty much similar to like auto insurance because, if you have so many accident or so many ticket, you might get approved or you may get approved, but with a higher premium, price and stuff.
You a bigger risk. They're taking a risk insuring you, so they're gonna charge you more.